Alright everyone, what is going on? Welcome back to the channel. In this video we're going to be discussing HEX versus UNI, the ROI ever since the airdrop of UNI occurred. So if you like this kind of analysis, leave a thumbs up, be subscribed by the end of the video if you aren't already, and let me show you this chart, okay? So this is what it looks like. If you guys remember, Uniswap was the first decentralized exchange that listed HEX. And it was actually HEX that made Uniswap pretty popular early on. If you remember, I believe HEX was the majority of the volume on Uniswap for a certain period of time. And because of that, a lot of people who interacted with Uniswap because of HEX, because it was the only DEX that you could really buy HEX on, buy and sell HEX on. If you remember, there weren't that many popular DEXes back in late 2019, early 2020. Before the whole DeFi explosion happened. And Uniswap was really the one that a lot of people who are in HEX have the same ethos as that of Uniswap, which is real DeFi, right? You're just you and the contract, no admin keys that can just drain your funds or any of that BS. So with that said, a lot of the people who interacted with Uniswap early because of HEX got the UNI airdrop. And if you guys remember, the UNI airdrop was September 17th or so. I can actually check here, where the actual data for UNI starts on Nomics is September 17th. And so we get a chart that looks like this. And the reason I'm bringing this up is because there is a move that was very common amongst people who got this airdrop, who were also exposed to HEX, right? And that move was dumping that free UNI for HEX. And you can see now, about 291 days later, almost 300 days later, how that played out, right? You can see who got the shorter end of the stick there, who got the long end of the stick. And it's pretty clear now, 300 days later, what the case is. Now, sure, there is this period of time here from day 129 to day 237, and this is actually quite the long period of time. This is from January to May. Some period of time between January and May where if you had held on to your UNI from the airdrop, you would actually been better off US dollar wise. Now that period of time ended in May, and then as you saw, we crossed above it, and now UNI pretty much dumped with the rest of the market. Looks like the same shape the rest of the market is doing, whereas HEX has its own completely different chart formation here, putting us at around 30.3x from the airdrop. That means that if you had dumped, right, if you dumped your UNI, which was 400 UNI, right, we got 400 UNI, and if you had dumped that for HEX at the time, you would have gotten, right, price was ranging, so if you dumped it that very day, then this, if you dumped it like a day or two or three after, you actually might have gotten a slightly better deal. As you can see, we had this kind of little run up on UNI for the first, 3 days or so, where you could have gotten like a 2x better deal. So there's definitely some wiggle room in here depending on where you sold, right, where you dumped your UNI. But for the most part, you would have gotten anywhere from like 2, 3, 400,000 HEX. So I think even more, like some people probably got like 500,000 HEX from dumping their 400 UNI, which at the time was like $1,200 or something. Again, anywhere from like 1,200 to $2,000 depending on where you actually dumped it. Let's actually look at the prices here real quick. UNI, yeah, it started at 3, ran up to like, I think it ran up to like 8, but here we have average prices, so it looks like it ran up to 5 on here, back to 3, and then the rest is history. So keep in mind that this chart does not account for staking either. So on HEX, ROI ever since September 17th when the UNI airdrop happened is about 30x, right? Whereas the ROI on UNI from that point in time is about 6x. So it's not bad, it's not terrible, right? A 6x is nothing to complain about, but compared to a 30x, you might want to complain at least a little bit. And if you notice, the highest point we actually reached in terms of ROI if you'd held on to UNI was about 13x. So that's pretty much the highest you could have gotten out at if you timed the peak perfectly. You would have gotten out with a nice 13x on your UNI, which again, it's not common to be airdropped like 10 grand plus. So, I mean, not bad. But at the highest point, HEX has been at 33x. And if you account for, let's say, a big payday, which was in November, so this was after the airdrop, meaning you could have received your Uni airdrop, dumped it for HEX, staked it, received the big payday bonus, and at this point you'd actually be sitting closer to something like 50x, right? So that means that $1,200 to $2,000 that you were airdropped at the time, if you'd held onto it as Uni, would now be worth like, I don't know, maybe like 8 grand, like 7 or 8 grand. Whereas if you had dumped it for HEX and staked it through big payday, right now you'd be sitting on anywhere from like $60,000 to $100,000. So pretty much an order of magnitude better, right? If you're only 6x up here and you're closer to 50x up on HEX than with staking, it's pretty much a 10x better move to have gone with HEX instead of Uni. So just to lay it out there, because I remember during this period of time between January and May, I was like honestly not happy to see that Uni was outperforming on this sort of chart. Like from this period of time, I was thinking like, damn, did I make the wrong move? No, the thesis was there for HEX. It has been, right? We covered on the channel extensively, and you know why it's pretty much better than everything else at this point in time. And I'll just say it straight up like that. But yeah, time has proven that to be the case. So just wanted to cover that for you guys. Now we can move on to a little more of the technical side of things. Stick around if you enjoy that. And we'll just update you real quick on our 20-day MA, 21-day EMA ribbon, which we are now above, right? Our candle closed above it yesterday, which we were anticipating. And now we have this little indecision candle. See, what I like to see is that we are in a nice uptrend and we're not making lower lows, right? The floor keeps rising. If we get rid of these moving averages, then notice how the floor keeps rising. We had a floor here, and then you could argue we had more floor action here, and if you notice, the floor just keeps rising, right? We're printing higher lows, which I like to see. We were in a clear uptrend, and these formations are bullish, in my opinion. Like, of course, we're not going to always have higher highs, but the higher lows are great, in my opinion, right? Like, we see our flat top over here, which became significant in terms of support over here. And now we have this other flat top around here, which we've tested twice at around the 10-cent level. So I like to see it. So if we look at our quarterly ROI, then you can see that we just started printing, obviously, our first few days. Here we have our 4th day printed at around 10%. So it's a good start. It's a great start to the quarter. If you notice, our worst quarters to date were these two down here, this yellow and light blue. And let's take a look at how these started. So the light blue actually started off with a dump, right? We dumped and we dumped and we dumped and we dumped up until like day 32 or so of the quarter. And that wasn't the best quarter. Now the yellow one, how did that one start? Well, it was pretty much flat, more or less, up until, funny enough, day 30 or so was its peak. And then it just came back down, right? And pretty much consolidated for that quarter. So both of our worst quarters to date have not had the best starts, so to speak, but that's not to say that any quarter that has kind of a rocky start won't end well. I'll give the example of this red quarter, which is Q1 of 2020, a pretty rocky start, but it was pretty much the second most profitable quarter to date, right? A point I want to bring up, because I had mentioned, right, that last quarter was the second most profitable quarter to date, and notice how it actually dipped on that last day. Reason being is because Nomics actually updates their data like once on the daily close, and then the next day they actually update it again to make sure they got all the right data. So for example, this close here, all of this data here for July 4th will actually be more precise at the end of the July 5th close. So I usually go back and, do that and make sure that's updated. So it was close. It definitely was super, super close. As you can see here, 4.6x last quarter, whereas 4.76x on Q1 of 2020. So just wanted to point that out. But yeah, as you can tell, this red quarter didn't start off so hot, but it actually ended up being the second most profitable quarter to date. So not starting off well is not indicative of future performance in that quarter necessarily. But you could say that if it starts off relatively nicely with some appreciation at the beginning of the quarter, it tends to be a good quarter. I think that's reasonable to say because look at this orange one. Started off really nicely, ended really nicely. Look at the purple quarter. Started off with a nice pump, ended off pretty nicely. So for the most part, again, not all of them, for the most part. Look at this green one. It started off kind of flat, but we had this nice little, what was it? It's hard to tell here really, but it was like a 7% pump by day 4. But all I'm really trying to get at is that it looks good. A good start to the quarter tends to look like generally a good quarter. Like if you notice, we're slightly above average. We're keeping track with the purple quarter, which was last quarter, in which we saw, almost a 5x. So if it's a good quarter and we see our typical 3, 4, 5x, obviously we could be sitting closer to 25-cent hex or even 40, 50-cent hex by the end of the quarter, which would be what, like September 30th? I don't know if there's a 31st of September, but generally I think it looks good. Now, last thing I wanted to cover here before the camera dies is the HEX versus ETH ROI, the 4-year cycle. Right? Is this 4-year cycle? I know you'll miss my face for the rest of this video, but hey, because we have our regular HEX versus ETH ROI from launch, but then we noticed that HEX has actually been ahead, right? It's been performing ahead of schedule. So then we shifted over just so we can visually see a little bit better that, what could be happening next, because this pretty much embodies the fact that it is ahead, right? So what could be coming next? Well, we're sitting at 171x from this point in time where this model starts, and we saw that ETH actually reached closer to 10x above that. So obviously close to 10x above this. Not totally 10x above this, more like 8x, but 8x from here is obviously not bad. It puts us near the 60-70 cent level by end of the year potentially, which puts us on track with our end of the year predictions of anywhere from like 50 cents to $1 conservative. If you're slightly more bullish, maybe a couple dollars. So that's really all I wanted to cover in this video. Last notes on this chart is actually once it's normalized to the pink curve, it looks like this, right? And something interesting I noticed was this little uptrend we have going on here, which all that really says is that, right, the ROI of HEX is approaching this green curve here. It's approaching it. And you can see that here and see that we had something similar play out over back here. I really wanted to point this out because we saw sort of a double top into the green line. Notice that we had a kind of a double top from here and here, a double top right here and here into the green line. And then after we had our dump here, again, we had our dump here, then we saw an uptrend. Over here we saw an uptrend back into a nice little bubble, which put us at 2.5x above, right? And just like 2 months later, right? So if 2 months after this, it would be like a month or two from now, right? If we did reach 2.5x above the curve, what would that look like? Well, we go to where the curve is, 2.5x above, let's just say 300 is 750, over 170 is 4 point something, so about a 4x from here, 4 point something x puts us in the 30 to 40 cent region, potentially in a couple months. So again, these predictions are bullish because the charts are bullish. That's all I'm going to say. So if you enjoy this kind of quantitative, technical, hybrid analysis on HEX price, leave a thumbs up. Definitely be subscribed. Thanks so much for blasting past 3,000 subs, on our way to 4,000, 5,000 and beyond. Leave a comment on what you think on these charts. Are you happy you dumped your HEX for Uni? Did you not? And are you kind of regretting that decision? If so, you know what? Not financial advice, but it's never too late, especially with Pulse Chain incoming hot super soon. We just got an update that things are pretty much ready. Things are looking ready. And we should be ready to rock with that soon. I also got a comment that I'm a little fidgety with analysis, like I'm just jumping from chart to chart, which I'll try to do better with. So apologies for that. But yeah, leave your comments down below on what you think. I'd love to hear your thoughts on literally anything related to HEX and Pulse Chain, whether it's this chart or the incoming launch or just anything regarding it. I always love to hear your thoughts. So thanks again for watching. Leave a thumbs up, subscribe, and I'll catch you in the next one. Peace.